Hey guys, it's Kevin. This is going to be a trade review video where I go over all the trades that I made in the last week, which was May 16th through May 20th. So I've got my trade list here. I made 20 trades and just going to line up the times and look at the charts and kind of see what was going on and if it was a good trade or not, and just try and critique myself in an effort to get better. So without further ado, let's check things out. So first trade of the week that I made was on Amazon on Monday at 9:41. I went long Amazon at 9:41. So let's see what was going on here in the stock. So Amazon had made a pretty decent move down, it looks like, and started to go sideways, and I was just kind of betting on a bounce, so I went long right here. So I was just buying the drop, and I bought 20 shares of Amazon, and when I trade 20 shares of something, I have a $1 stop unless otherwise stated. So I was in at 704.75 and ended up getting stopped out 7 minutes later at 703.64 at 9:50ish or so. So this move down here, I like what I was trying to do. I was trying to bounce a stock that had been the strongest stock that I've been following. It got close to $700 after hitting 720 earlier in previous sessions. So it just looks like a bounce play that didn't end up working. Could have waited for a better long signal, but I attacked the pullback, which is something that I like doing sometimes. And what I mean by that is buying something without a clear signal, just kind of attacking it as opposed to waiting on stability and trying to get in versus a level. This was just kind of trying to buy it on the way down. So attacked the pullback, and it didn't end up working out, but I like the stop and I like the idea. Just didn't work, so kind of ho-hum. Could have done better by waiting for an upside signal, but then it's more of a patient trade, because as it is, it did not give upside in the near term, continued lower before then going higher later on in the session. So next trade was on FCX at 10 o'clock just about. Went long FCX that same session. So looking at FCX on Monday. This isn't Monday yet. So FCX, I went long at 10 o'clock, right in this area here, and I like this move because you started out higher and then you pulled back. So I just bought the first meaningful pullback of the day. I bought 150 shares at $11.08. I really like that trade because I know mentally I like trading versus round levels, dollar mark levels. So $11 was a dollar mark level, and 150 shares, I target a 20-cent move, and that's what I ended up selling for. I got my target at $11.28 about 6 minutes later. So really like that trade. Another one where I kind of attacked the first meaningful pullback of the day. Really like the setup because my stop loss was just under $11, and I like trading versus what I call dollar mark levels. Anything that's 11, 10, 9, etc. Those are all dollar marks. So I like that. Held for target. So good trade. I like that one. Next trade was on Google. I was short Google, so I guess I had shorted Google around the same time I was exiting that Amazon trade. So Google I got short at 724.35 at 9:48 on Monday. So I see why I got short, and I also see why it didn't work. So I was kind of short biased on Google coming into the week, and I liked this initial move down. So once I saw that move down below 725 towards 720, I wanted to short a bounce kind of versus 725-ish. So I got short on this move here, just a 7-share lot. 7-share lots have stop losses of $2.85, and I ended up getting stopped out as Google did move higher, but no reason for it to have made a new high if my thesis was going to be correct, and Google did end up trending higher on that day. So just a case where I was wrong, but I like the execution. Like the short setup versus 725. So took the entry when I got it, but ended up getting stopped out, and stock trended higher. So stop out was in the right place. Just a simple case where I was incorrect with what I thought would happen. But that's kind of why I like this trade, because even though I was incorrect, I didn't fight it. I got out, respected my stop, and obviously it proved to be the right decision, because if I would have held, Google then ended up going into the 730s. So good job being wrong, which is something that isn't easy. You know, we need to learn how to be wrong, and I did that on that trade. So I like what I see from that. Obviously I want to win, but what are you going to do? Next trade was again on FCX. So after selling at 11.28, it looks like I then bought a dip later on at 10.47. Later that day, this is still Monday the 16th. Oh, I went too far back. So I went long at 10.47. So here was the first trade, got in, got out into this move, and then here was the second entry. Going long at, I said 10.47, yeah, 10.47. So I went long at $11.19 in this range here, and I remember this when I actually raised my target. I had been looking to sell 11.39, but I really liked the way it came back up towards the high right here, and just as it was making this move, I raised my target up to 11.50, which would have been a new high. Of course, as it happened, FCX ended up coming back down and, you know, not continuing higher, ended up stopping me out. So I was in 11.19 at 10.47. I stopped out at 11.14 at 11.21 once it started to break down here in this range. So this is an interesting one. I'm not that upset that I raised my target, because that's something I'm trying to get better at. If I would have left it at 11.39, I might have gotten filled. The high was 11.39 exactly. And again, the reason that was my target is because this was a 150 share lot, and I was in at 11.19, and when I trade 150 shares, I'm looking for a 20-cent target and a 13-cent stop loss. That's predetermined using bracket orders. So I canceled the sell order as it was getting close, looking for 11.50. First of all, I like the entry. You know, I made a winning trade on this one, and I exited. So then when it pulled back to here, I tried to make another winning trade. So I really like the entry. I like the thinking. Revisiting winners is something that I'm trying to train myself to do. So good job revisiting this trade. I like the entry point on the pullback off of the high, similar to the first one that worked out for me. Ended up raising my sell order, which I'm okay with that too. Obviously wasn't the right decision, but in the moment, you know, I like that because it looked good. Even when I look at it now, you know, if this is all I can see, which is all I can see at the time it's happening, if this is all I'm looking at, and I remember watching this specifically as it was happening, this move here looks pretty good to me. And you know, I was looking and I really believed it was going to go to 1150, so I wanted to try and press the winner and get even more out of it. I don't think it was a case of greed. I think it was a case where, based on what I was watching, it looked like it was going to go higher, so you know, I made an adjustment. So I liked that adjustment at the time. However, here's what I don't like. I raised my sell order because I think it looks pretty good. But if we move forward, as soon as this candle happens, that no longer looks pretty good. I did not like seeing that. So just like I raised it because I thought it was going to go higher and I had one adjustment, I need to then have a second adjustment and say, well, wait a second. You just raised it because it looked really good. Now it don't look too good. So what's your next move? Are you selling at break even? Are you taking small profits? Are you raising your stop? What are you doing here? I did end up raising my stop to $11.14, which was just below kind of these levels here. But when I see it now, I would have preferred to raise my level to break even, because after you made this move from here, there was no reason to then come back down to 1120, which is just about where I was in from. I was in at 1119. So no problem with raising the sell order initially. The problem I have when I review this is that I did not then lower it back down and make more of an aggressive adjustment. So I don't like that I didn't make a second adjustment once it didn't look as good anymore. If I'm going to be aggressive one way, where I raise the sell order, I have to be willing to be aggressive the other way. So good experience, could have done better overall with the management. So that was it for my trades on Monday. So then Tuesday, first trade of the day was again on FCX. So let's look at Tuesday here. So FCX, my entry was at 9:39 and 53 seconds, so about 10 minutes into the day. I bought at 11:26, 150 shares. I ended up getting stopped out 1 minute later at 11:13. Again, that's a predetermined 13-cent stop loss. Entry point, meh. I see what I saw though. I liked that number one, you were gapping higher on this day. If we go here, we can see it in the pre-market. FCX previous day's close was around 11 bucks, and then on this Tuesday morning it was gapping now to around 11.30. So I liked the gap higher, and what I really liked is when you opened at 11.30 you came down to 11.10 and then immediately bounced up to touch 11.50. So I saw that and I got pretty optimistic about things. And furthermore, what I liked about that is it gave me a clear level to trade against in the form of 11.10. it gave me a clear level to trade against in the form of 1110. The problem with my entry when I look at this trade is I know I've got a 13-cent stop loss, so when I enter at 1126, I'm getting stopped out above 1110. I needed to enter as close to 1110 as possible, or wait for, a more clear pattern of some kind, because Monday FCX started out higher, if we just go back to Monday for a second, but I was willing to wait until about 10 o'clock for some type of pullback to materialize. On Tuesday I did not have the same type of patience. I just kind of rushed in, well, not rushed, but I was more aggressive. I did not have the same type of patience, I was more aggressive, and that turned out to be the wrong decision. So would have liked to see myself get a better entry. Since 1126 was too far away from my reference point being 1110, to give me a good stop loss area. The other thing I would have not minded to see myself do is, instead of trading 150 shares, if I still want to get in and be more aggressive, trade a smaller amount of shares. I could have gone with 100 shares or 75 shares. By doing that, I would have been allowed a wider stop. So that's one note I'm going to make here. If I want to be more aggressive, I can always reduce my size in exchange for a wider stop. Because, as we see here, FCX then pulls back, so I get in right here around 1125, and then pulls back, undercuts 1110 right here. This is where I should have been taking my first entry, but instead I'm getting stopped out as they take it out below 1110. Had I gotten in closer to 1110, maybe I don't get stopped out here, because it only hits 1109. Right? Oh, sorry, my reference point was 1116. I'm sorry. I had the wrong mark. I misread it. I thought it said 1110. It was 1116. Okay, that changes things a little bit. Now I understand my entry point, because my 1126 entry minus 13 is below 1116. So I was saying, okay, I don't want to see it go back below 1116. So not as annoyed with my entry, but still less of a setup, more of an aggressive trade. So I'd still say, if I want to be more aggressive, can always reduce my size in exchange for a wider stop. And I ended up getting stopped out. End up getting stopped out into the new low. Not a whole lot more I feel like I can say. I thought the reference point was 1110, but it was 1116, so not as annoyed with that trade as I was if I thought the reference point was 1110. Alright, so next trade, I get right back in FCX. I make some option trades on FCX from earlier, and these are the same exact type of deal here. The option trade. So I hate this option trade, because I'm already going long stock, so why am I going long the option too? Like, pick one or the other, or again, reduce size, and if you want to play both of them. So I'm just going to make a quick note that I really don't understand this option trade, since I was already going long stock. Would prefer if I just traded one or the other, especially if they're on the same side. It'd be one thing to go long the stock and then short some calls, or go short the stock and short some puts, but the fact that I was going long stock and buying calls, that means I'm extremely bullish, and obviously it didn't work in that instance. So the next trade, I felt like this was one of my best trades of the week. remember, I get stopped out on FCX at 11:14. Oh, no, sorry, at 11:13 off that 11:26 entry at 9:40. But 4 minutes later, I buy that same position right back at 11:20. And I'll show you why I felt like this was one of my best trades of the week. Because after getting stopped out, I buy FCX back right here. This nice recovery. I got in at 11:20. Alright? And I remember watching this on level 2. As soon as I got stopped out down here, I remember being like, man, they just faked me out. They just took me. And I remember feeling like, you gotta get back in. You're dead on with this trade. You just had the entry point a little bit off the first time. So I went with my gut, and not only my gut, but also what I was seeing. When I was watching level 2, I was seeing very aggressive bid action. I really liked the way it was coming off of the low. And remember, it had gapped up, so it was still positive on the morning. I liked that it had regained 11:16. So I went long again right away at 11:20. So I really love the confidence here on this trade number 7. Yeah, trade number 7. Really like the confidence to get back in quickly after having been stopped out. The other thing I like about this is it was 150 shares at 11:20. 13-cent stop loss puts my stop loss at $11.07. Well, if I am right with what I'm seeing, there's no reason to make a new low. No reason at all to make a new low if I have this read correct. The low was 11:09. So if it's making a new low at 11:07, I'm getting stopped out on that. So even though it was a rushed entry at, where are we here, 11:20, it was still an entry that, in terms of when I look at my stop, it's going to be okay. It's still a disciplined entry from that perspective. So I really like that combination of confidence with something that makes sense. I'm going to call it reference point sensibility. And then I ended up selling this at $11.50 at 9.50. So usually I have a 20-cent target, but I raised my target to $11.50 once I saw the way it was coming up, and I just got taken out pretty much right away within 5 minutes into this move here, and I just loved it. I loved that entry, and I loved the way I caught that move, and I like the confidence to raise the sell order. I was able to catch a bigger move because of that. And going backwards a little bit, this is where, when I visit number 4, remember I raised the sell order, but I didn't then make a second adjustment. This is why I had no problem with raising the sell order on number 4, because even though it didn't work out on number 4, it worked out perfectly on number 7. So by reacting to myself and my own thoughts on number 4, I'm training myself for better trades like number 7. So even though number 4 didn't work out, I still liked the aggressiveness, because that same aggressiveness showed up in number 7 and it worked out perfectly. So really nice trade. Next trade was number 8, ABBV. Went long ABBV at 10 o'clock at 59.05. This is a tricky trade. So ABBV had a big tank out of nowhere, which is why I was trying to bounce it. This was a frustrating trade because, so I went long at 10 o'clock right here at 59 bucks, and initially I did catch a little bit of a bounce, but not as much as I was looking for. I was in for 50 shares, and 50 shares will have a 60-cent target and a 40-cent stop loss. So I'm in for 50 shares, was my entry point at 59.05, which had a stop loss under 58.75, which was kind of a level I wanted to trade against. Unfortunately, it just kind of came down right here this very next candle and took me out at 58.50, so I got stopped out right away. And I like the idea a lot, but what I would do differently the next time is, it's one of those examples where there's so much volatility, I need to play with smaller size so I can have a wider stop, or I need to be accepting of a bigger loss. So right idea. Again, I really like the way I attack I attack the bounce. This is a stock I'm very familiar with, so when I see ABBV dropping 5%, right away I just go to it and try and bounce it. Just unfortunately, stop loss was a little too tight for the volatility that it was experiencing. Because again, I got stopped out basically at low a day, and then you can see it did end up giving a $1.25 bounce. So adjustments would have been better to either accept greater potential loss or smaller size. In either case, it would have allowed for a wider stop. Just need to remember to treat volatility, intense volatility like that, a little bit differently. Need to make adjustments when there's that super high volatility for a quick period like that on ABBV. I'm going to jump ahead a little bit because 14 and 15 were follow-up trades that I made on ABBV, and the way my orders work is it calculates positions from the time they were closed, so just bear with me. So 14 and 15, I short puts on ABBV, and this is another thing where I love my adjustment on the fly. So I get stopped out. It's kind of annoying there on trade number 8, the one I just went over. I get stopped out at 10:01:15. But then look at what I do at 10:04 and 10:01:42. I'm shorting the weekly 56 strike puts. I short one for 60 cents. I short another one for 45 cents. And when I'm shorting those puts, what I'm saying is that I'm willing to buy ABBV at 56 bucks if that's where it closes later in the week. And the reason I really like this trade is because big move down like that, implied volatility jumps up, and it gives you an opportunity to sell far out of the money puts at prices that you're usually not able to sell them for. These 56 strike puts, as you can see, they hit up 60 cents. They even hit as high as 75 cents. My best sell was 60 cents, and 1 hour later I was able to cover them for 20 cents for 55 and 66% gains. So just after 1 hour, with the stock only recovering by 75 cents or so to 60 bucks, all that Vega came out, and there had been some time decay because implied volatility jumped up a lot on this huge move down, but then as the stock started to go sideways, implied volatility crashed back down, which resulted in a nice drop in my premium. So I really like trades 14 and 15. Great premium short on a stock I'm very familiar with. After getting stopped out on shares, so I found another way to go long, which I felt like was the right idea. And then trade 15 was the same trade, just at a higher price. I shorted the first one for 45 cents, shorted the next one for 60 cents, and so, you know, I like the confidence to take advantage of the drop by shorting puts. Now the only thing I could have done better, I covered them for 20 cents. Could have, would have, maybe if I was really in the mood to be risky, taken them all week and they did end up expiring worthless. Not going to beat myself up over 66% gain, but could have reasoned to keep holding and bet that they expired out of the money, which they did. Because in reality, the options market only priced in about a 10 to 15% chance that they would be in the money when I was shorting them. If you look at delta, you can see how what probability the options market is giving those of expiring in the money. And again, at the time it was only, I think it was like 13% or so. Alright, next trade, numbers 9 and 10. These are some FCX option trades again, and you know, again, I just don't really like that I'm messing with the options on FCX, especially on a Tuesday, especially after I just made a winning trade on the stock. Like, if I really want to trade it again, just go trade the stock, bro. Like, you don't need to keep going back. So I entered them at 954 and 956 on FCX, so I bought them when it was holding this move. But again, in terms of risk, I just don't understand. I had just made a great stock trade. Why not just either wait a little bit or just try and trade more shares again? So worst trades of the week right there. Just don't understand what I'm doing with the options when I've been making solid trades on FCX shares. Nothing else to say about that. Trade number 11. So then here I go. So now trade number 11 and 12 was an average into FCX where I was going long shares. So I like that again here. So first entry was 1151 at 1022. I'll check that out. And then the next entry was 1142 at 1031. 150 shares each, which means 13-cent stop, 20-cent target. So if I look at this on FCX, time of day was 1022. So it is when it's doing this move here. So once again, I understand my entry point. What I'm looking at is I'm seeing a stock that made a nice move higher and is now kind of consolidating and holding that gain. So I like that. No problem with the entry point. I do one purchase at 1150 around here when it looks like it might be spiking again. And then I do another purchase at 1142 at 1031, which was this area around here. So a couple things that I like here. Number one, I like the increased size. Usually trade 150 shares. This time I did 250 share lots for a 300 size order. And what I like about that is, you know, good confidence. So I'm going to treat 11 and 12 as just one trade in terms of the critique. So first entry was okay. You know, bought the rebound above 1150. I like the second entry a lot more, down near 1140. Overall though, I like the confidence to trade larger size than usual. And then, so I sold one batch at, so my average in this case was about 1146. So I sold one batch at 11.62 and then sold the other batch at 11.71 at 10.44 and 10.45. So if I look at the sell orders, and I like the sell orders because the first one was into the new high. I wanted to take some profits as it made a new high of day. The high of day was 11.61. My sell order was at 11.62 to sell the first high of day break. And then the second sell order was 11.71 into the new high, or into the new high of day extension, I should say. So all in all, I like those exits. And again, just a good case of aggressive trading. If it weren't for those stupid option trades, then I would have done even better. But at any rate, good exits. First one into the new high, second one into the extension, and just good aggressive trading. Seemed very confident and like I was in a rhythm. And again, number 11 and 12, they're categorized in my list as two different trades, but really it was just one trade. So next trade, number 13, I shorted Google at 7.30 and 75 cents at 10.20. So let's check out Google. So shorted Google 7.30 and 75 cents at 10.20. So I shorted right here. And this is another one where I really like my entry because I wait for what I feel like was a confirmed move down. It gets below 7.30. 7.30 was a pivot point that I was watching. So then once it comes below 7.30, I placed an order to short the bounce, and I got filled on the bounce. Really, really good entry. When I look at this chart, I mean, my entry at 7.30.75 was the highest point that it ever saw the rest of the day. So very good entry. I like that I waited for a confirmed move off of the high and then shorted the first bounce back near a round level. So entry point makes sense. Now I exited the position at 10.59 at 7.28, which means I made an adjustment because I looked for 4.5 points and I made $3.75. So that tells me I lost patience. So I covered at 11 o'clock just about. My cover was down near the low 727s. It got down to 727.50 a couple times, and I was getting annoyed with that I wasn't filling when it was like 50 cents away from my cover, so I just decided to cover at 728. So I lost patience a little bit. I understand why I did that, though. It is annoying when a stock comes right to your fill and just seems to be playing keep away from you. So lost patience and decided to cover above target, which I understand. Not a major problem with that, because if I look at the stock after I covered, it then did bounce back up to 730, which if I would have been in and I didn't cover 28, who knows, maybe then I end up covering 730 or 729 and giving back some profits. However, as the day progressed, Google ended up hitting 720. In fact, it hit 718 later that day. So not too annoyed with covering when I did, but where is the re-entry? It was still a good trade. Everything was still intact. Need to remember to revisit winning ideas. Need to revisit winning ideas. Because again, if we look at this Google, yeah, it took a long time. sideways all morning basically, but then starting at about 1:30, just a beautiful 7-point drop that I was not a part of, and I should have been. Next trade, number 16. I went long Tesla. I bought an option. I remember this. This was a boring trade. Boring trade meaning I was bored on the day and was trying to make some money instead of trying to make a good trade. So I went long Tesla calls at 11:27. On the 18th, which is this day. So Tesla on this day had made a really nice move higher at the open and then just went sideways for a long time. I bought calls right here and I just have no idea what I'm doing. I mean, the stock is just completely flat. I suppose I was looking for it to break back up, which could have made sense, but the problem is there's absolutely no signal. Absolutely no signal. What I would have liked is if I waited for, a break out of this consolidation. Instead, I tried to anticipate a break without getting a signal. And so as it happened, I ended up taking a loss, 8% loss, which is a good small loss for an option, only to lose 8%. So in at 217, out at 199. So I don't like the entry because there's no signal. What I do like though is that I recognized that there wasn't a signal after 15 minutes and just decided to exit at a small loss. And if I wouldn't have exited at a small loss, I would have been very damaged because that option ended up dropping like 50% as the day went on. So stupid trade, but recognized it. Again, there was just no signal. Even in that stupidity though, good job recognizing and getting out. I didn't get stubborn. I'm sorry. Next trade was on Google. I shorted Google at 9:52. So earlier in the day I shorted Google at 723.70. Shorted 7 shares of Google. 723.70. So let's give her a look here. And I went short at 9:52. So this was a trade where I was shorting versus 725, and I got short at 9:52. So what I like is that it tested 925 and then backed away from it, going from 925 down to 921. Sorry, going from 725 down to 721. And then so I put an order to short the bounce, and I got filled right here on that bounce. So I like my setup in that regard. And what I love the most, ladies and gentlemen, is I suck at holding on to positions for a long time. Remember the previous day? I exited Google after 60 minutes. I lost patience and then missed a great move later in the day. Well, look at this. I bought at 9:52 and I sold at 2:25. So I held for 10, 11, 12, 1. I held for like 4.5 hours in this trade, which is a very long time for me to hold on to a day trade. So I love the patience, really, really love the patience. Furthermore, I adjusted my exit. My exit was going to be in the 719s. Instead, I ended up covering 717s. I felt like I could get more, so I made some extra money there. Covered at 225, and if we have a look at it, I never got stopped out. My stop was 727, a little bit above that 25 mark. And as you can see, I remember holding on this move right here, thinking, oh, I might end up getting stopped. But then, boom, huge move down, 724 down to 716. Just an awesome trade. I would say that one and the FCX one that I mentioned earlier, my two best trades of the week. I got covered right around here, right near the low, which is very good. I love the patience. Really like seeing that for myself because it's something I really struggle with. So by seeing that, it tells me that I am getting better. I'm not just going crazy. So good entry, verse 725, reference point area, and great patience. Some of the best patience I've ever displayed, to be quite honest. And good confidence in lowering my cover to increase my profit. Just great trade all the way around. Really liked it. Next trade was Tesla. So this was the next day. So this was Thursday. I bought a Tesla call at 9:46. So let's see. So now the chart's not going to show this tremendously here, but what I like about it is Tesla had gapped up this day and then made a spike higher towards 216s, which was new highs for the week. So I was bullish on Tesla after it made a new high for the week. Felt like that was a constructive sign, and I wanted to buy a pullback versus the opening high. The opening high was in that 213 to 214 area. When I refer to the opening high, I'm referring to this action here. And so I got filled on this dip right here. And if you look, this is cool when this happens. Kind of get lucky, but hey, everybody gets lucky now and then, right? So I was in at 946 at 205, and I was out at 947 in 13 seconds. Literally, I wasn't even in this trade for more than 65 seconds. I was out at 250 instantly. And what I love about this is I used a bracket order. So as soon as I filled, I had a profit taker order in. And because of that profit taker order being in, I was able to get an exit as it bounced, because it went from 213.50 back to 215, and this happened in like 45 seconds, which is why I was able to make 20% in 65 seconds. And if I don't have that profit taker order in as soon as I enter, I'm never getting filled, because look at then what the stock did thereafter. It ended up downtrending. So kind of got lucky, but I put myself in a position to get lucky. I don't think anybody gets lucky by accident, to be honest. I'm sure some of you would disagree with me on that, but I think luck is a byproduct of the way we carry ourselves and the types of positions we put ourselves in and the types of disciplines we use. So, you know, I'll be the first one to say that. Definitely got a little lucky on this, but good job using the bracket order, which allowed for me to get lucky on that quick bounce. And the key here was the disciplined entry. I had placed my order at 205, or sorry, I placed my order at 190. I filled at 205. I placed my order at 190. As it was testing that area, I was watching level 2, and I felt like my best chance to get filled was raising my bid up to 205, and that allowed me to get filled. So it never filled a 190 bid is what I'm saying, all right? So if I didn't end up raising a bid to 205, I never get filled on this trade, I never make this trade. So by raising the bid, I do make the trade. So I like the confidence to raise it. I like the intuitiveness, the instinctiveness, whatever you want to call it. All right, next trade was on SM. I shorted SM at 27.45 at 10:32, and I covered it for break even 12 minutes later. So let's see what was going on. So SM on this day had gapped down. I got short at 1032, which was this candle here. So I like my short entry versus 2750, and I like that it had come after the stock had been downtrending. So I missed a downtrend move and I waited for a bounce back up towards a round level. I also like that this was near the opening lows. So in terms of reference points, I had some reasons, or I had some levels to be trading against. So fine with the entry. I like the entry point on the bounce versus 2750 area. And then I cover at 1042. So I lost patience. I was looking for a new low a day. I was looking for 27.75, which would have been below the current low. I covered because it cracked. It cracked right here, and I felt really good about it. And it got down to 27 bucks, but then it popped right back up to 27.40, and I just simply did not like that. It did end up coming back down, so if I would have stayed in, maybe could have covered down at 27. However, what I want to point out is that SM never did hit my target, and as the day progressed, ended up making a very big bounce back up. So trusting my instincts back here and just covering and moving on did end up to be the right decision. So I like that. Anytime we trust our instincts and it works out, I think it's gratifying. So covered break even, avoided a losing trade later on. So just good job listening to your instincts. Alright, last trade of the week, I traded Tesla calls today at 9:36 just about. I bought a 220 strike call for 80 cents and I sold it about a minute and a half later for $1.02 for a 27% gain. So let's go back to Tesla and look at that. Oops. So Tesla was gapping higher today and opened up around 17. I was watching it very closely. I liked this candle here, and really I wasn't even watching the candle, I was just watching level 2. I really liked the bid activity. Felt like there was a strong buyer in there off the open to push it higher, and just made a scalp trade, made kind of one of those chase trades which can be risky, but I liked what I saw in level 2, and then I just sold it right away in that little push. On Friday, options will move a lot even if the stock doesn't move that much, so even on this what was only like a 75-cent move higher, I was still able to capture a 27.5% gain, which is smaller than the gain I was going for. I was looking for $1.10, but I ended up selling $1.02. So chase trade, aggressive trade, and I made an aggressive exit. So I like the trade because it worked, but if it didn't work, then this is one where I don't know if I'd still say, oh yeah, good trade. So I need to be careful about these. Because they can really go either way. And when it works, you feel good about it. When it doesn't work, you kind of feel bad about it. What I like the most, though, is that I was aggressive both ways, entry and exit. I didn't make an aggressive entry and then a conservative exit. I made an aggressive entry and then an aggressive exit. As soon as I had the chance to take profits, I did that, and that's something that I think personally is important when I'm making chase trades. So just some general takeaways I have from the week when I look at this and look back on things. I felt more confident this week. When I look back at these trades, looks like I had a lot more confidence just with some of the things I was going for and the way I was attacking some of my setups. So I really like that. Also seem to do a better job being patient, particularly in Google. And just going back to the confidence thing, raised my profit targets at times, like on FCX and like on Google. Now, one thing I didn't like is I seem to get distracted with those FCX options in particular. Seem to get distracted, and the Tesla call trade on 519, remember the one where I said there was no signal, and those distractions cost me. They didn't cost me big money, but I'm trading small. I'm not making huge money, so every little bit counts. I cost myself $18 on that Tesla. I cost myself another $10 on the FCX options. In fact, I cost myself a little bit more on that, $10 on one of them, but then $16 on the other one. So 28 plus 16, so I cost myself like 42 bucks, 43 bucks in just distraction trades or lack of focus trades. And my total losses on the week in terms of my gross losses, if you look at just the week that I had, so I lost 42 bucks on what I would classify as just distraction trades. My total gross loss for the week was 161 bucks. So if I just don't make those trades, I'm only having gross losses of 120 bucks, which in terms of that would mean I could have reduced my gross losses by 26%. And that's very meaningful. So I've got 26% worth of my gross losses just kind of given away, and that's stupid. It's just stupid. There's no good excuse for it. So cost myself in that regard, but all in all, a good week. Again, I like the confidence, and I like the way I was patient, and in general, really good entries for the most part, and pretty good ideas. I wasn't wrong on very many trades. Again, if I take away those distraction trades, so I made 20 trades, I won 10, and I lost 10, but I lost 1, 2, 3, 4 of those trades. 4 of my 10 losers are the distraction trades, so in reality I only had 6 losers out of 20, or sorry, 6 losers out of 16 trades when you talk about my the real trades, the ones where I was focused and not just dicking around. So that's a 62.5% win rate. That's really good. So just need to limit those unforced errors, is what they'd call them in sports. Need to limit the unforced errors, and I'll be doing really well. All in all, I'd give this a solid grade. Give myself a solid B. I'll give myself a B- because of those distractions. Alright, so I hope you guys enjoyed this trade review. I encourage you guys to review your own trades at the end of each week. Whether you have a good week or a bad week, I think it's important to review your trades. I know some people that they will only review their trades after they have a bad week, and that doesn't make much sense to me, because if you're having a good week, don't you want to know what you're doing well? Don't you want to know, what's really working for you, if there's any particular stocks that you traded very well? So be sure that you're not only diving into your trades when you're sucking. You need to be diving into your trades when you're killing it, and see, oh, okay, well, that's why I'm killing it. All right, have a good weekend, guys. Good luck next week. I'll talk to you.